Hello again, everyone. This is Joe Henches with Beyond the Chart, and this is Stock Market Today, Saturday weekend edition. Today is Saturday, June 13th, and we're going to take a look at the markets the way we usually do here on the weekend, where we look at the daily and the last 2 days, and then we're going to look at the weekly charts, look at our key ETFs and our indicators, and then the 5 stocks in focus today are going to be kind of retail oriented. We're going to look at Best Buy, Costco, Netflix, SBUX, and Whole Foods Market. All right, we're going to start off here with the Dow Industrials. The Dow was down 140 points on Friday. So that big bounce that we got started to reverse a little bit yesterday. So we'll see what happens. I talked about the put-to-call ratio and the extreme reading and what happened one other time when we got a bounce and a reading like that. And it may be playing out. We'll see. One day does not make a trend. So we'll see how this, if we get some continued action to the downside. So right now I am staying with the labels of a downward move, assuming that 5 waves have completed, assuming we are breaking down out of this wedge, ending diagonal, and therefore I'm counting a minute wave 1. I think we're all working these 5 waves down within a first minor wave, and so I'm counting a 1, 2, and then a 1, 2. So we'll see how it plays out. If the market starts to change and morph, then we will adapt and change also. Right now, the S&P 500, I'm using the same wave count, same type of thing, same type of action. NASDAQ, little different, okay, not quite the same picture, but a couple of doji type of bars again. So, indecision, pausing type action that's going on here. And when you get this like right here after a 2-day move like that, sometimes it's like right here. Sometimes it's that's the temporary top, just like right here. So you never know for sure, but it kind of raises a little flag anyway, is the whole point. New York Composite, same type of thing. Got that little doji action on Thursday, and then we drop back down. Now, not as big a bearish bar, but we're back down below the 10. 10's below the 21. 21's declining. We broke down out of this wedge type of action, and now we pull back, and now we're back down below it slightly. Russell 2000, again, more like the NASDAQ and acting like NASDAQ. I mean, look at these little doji bars right here. And has not broken down. Still riding above the 10 here the last 3 days. All right, the weekly. Take a look at the Dow on the weekly basis. We've got 3 bars, 3 weeks in a row closing below the 10 week. Last time we had that was January, and then prior to that, let's see, where was it? Was it January? Maybe I was looking at the S&P 500. I know we had it here in October. This one barely closed, I think, below the 10. Let's take a look at the S&P 500. Now this is 2 weeks below the 10 here. And again, it looks like we're breaking down. But we don't have the 10 week below the 21 week. We just never got, on all of these, we never got any confirmation really on the indicators. There's nothing there on the S&P 500. There's no volume that I have on that indice. The NASDAQ weekly. Again, it's kind of hanging up. The NASDAQ and the Russell 2000 doing about the same. But again, just, it looks like 3 doji bars in a row here on the weekly, which just, the market is searching for direction. It feels like it's trying to roll over, but it's still just giving that kind of searching for direction feeling. Russell 2000, a little bit stronger, but again, when you look at where the closes are, I mean, look at where the tops of those bars are. It really, here is at 1266, 1267, and 1265. And so we're literally within a point in all of that since March 20th. So last 2.5 months, almost 3 months. And we're almost right in the same exact spot where we are today at the end of this week. All right, let's take a look at the indicators. Short-term trading index. Now, you know, it was pulling down, thought it was about to go to the extreme below 0.90, and then here, because of the selling, you know, we pull back up again. So the 10-day is at 1.13. If we go to the VIX, let's take a look here. Of course, we talked about how the VIX had this big sell-off. This is what I looked at on the Wednesday night, the 10th, and here's Thursday's action, and then the bounce back with the selling yesterday on Friday. So I don't think, let's see, 13.78. So it's right at the 10-day moving average here on the VIX. You know, sharp little pullback, but it's hard to read anything into that. The 10 is above the 21 in terms of the moving average, but it's almost like it's the moving average is kind of going sideways a little bit. The next one is the high-low. And the high-low dropped back down, okay, but didn't get super negative with the 140-point drop. We had 51 more new lows than new highs for the day, but it's back down below zero. So it's minus 51 is the reading. Again, we get this W bottom, we get this little pullback. For this to turn into really, really negative, it's going to have to take these out right here in terms of lows. I'm a little, you know, this little scenario here, I've seen it many times on indicators. I almost call it like a W branch or a W, I don't know, W pullback or whatever. But I've seen this, and so I'm a little bit cautious about what might be going on here. But we'll just have to just keep monitoring because you never really know for sure. Now, the put-to-call ratio, the 10-day put-to-call is now at 0.59. So that's down from a week ago. It's 0.62 on the 10-day. But again, I don't consider it extreme until the 10-day gets to 0.54 or below. Below 0.55 is the way I got it on my readings. Okay, let's take a look at the high yield bond fund. And I didn't pull it up. I got to find it. Okay, so here's the high yield bond fund, and you can see that although we got a little bounce on Wednesday, Thursday, we came right back down on Friday, and I think we closed at the low, the lowest reading, daily reading. And if I convert this to a weekly chart, you can see, of course, last week was a big downdraft, and then we closed below the price action of last week, and we're down below this point here, and it looks like we're breaking down, and that's an indication, I think, a sign of what's going on with the market right now, which is a risk off, which is exactly the title of one of my posts here a couple of posts ago. All right, let's take a look at the TLT, 20-year Treasury bond fund. Okay, so I was looking for another fifth wave move down here of a third wave, minor wave down. It looks like the pattern's still continuing down, although we had a little two-day snapback. We are not trading above the 10. 10's below the 21, below the 55. So, short-term and intermediate are still trending to the downside on TLT. The next one is the dollar index that we'll look at here. If I can find it quickly. There we go. It's right below the TLT. And, the dollar, I've still got this pegged in a fifth intermediate wave up, although the price action here over the last 5 days, let's see, the fifth would have been last Friday, is that we've kind of trended down a little bit. So we'll see whether we get that or not. If we come back down and take out this low, then we've got to revise and rethink what's going on here. But right now I'm staying with this scenario and thinking that we're doing some kind of minor wave 2 pullback. Let's take a look at U.S. oil, USO, United States oil. Okay, so again, this is not doing a whole lot of anything. Kind of trended up a little bit for the week, but the last couple of days have pulled back. So this was Wednesday, it's the last time, and then we pulled back a little bit. But again, very doji, like a very small little doji bar on Friday's price action on oil. And gold is not giving us a whole lot stronger of a picture. GLD, it's just chopping around. We had this big move down over a couple of weeks here to the low on June 5th. We bounced up a little bit, And it almost looks like a series of, three, like a three wave, and almost like a three wave here and a three wave back up and a three wave here. So I've got to kind of figure out, the picture is not very clear to me right now. I'm still sticking with a possible, like A, B, working some kind of C move. We could be doing a 1, 2, some kind of chopping sideways and moving up 3. If that's the case, then this is going to need to take off here soon. Otherwise, this alternate count may come into play. And I talked about, if this low is taken out, then I'm going to have to, I think, start moving to the alternate count that I've got in here. All right, let's take a look at semiconductors. SMH. There we go. All right, so the semiconductors, the short term looks like it's breaking down. It looks like we've broken this upward trend line from late March. We had a little pullback and then pull back down on Friday. So now, I am leaning to the fact that it would then continue this rollover. We'll see whether we get that or not. We thought we were getting a little breakout here with this move, breaking above the highs, and then it pulls right back down and fails. And it looks like it's trying to roll over. Next thing we'll look at is the home builders. There we go. And the home builders, you got to look at the scenario and look at from right here, which is, I think, the high close on February 24th. We've just been chopping sideways. Sideways action. Now, this was Wednesday, so we popped up a little bit on Thursday, kind of went sideways, a little up a little bit on Friday, but basically almost sideways. For the week, though, here was last June 5th, so last Friday, we were up over here for the week a little bit. But again, not showing any kind of strong bullish action. If anything, it looks like it's kind of topping out a little bit. Now, it hasn't really broken down. It's like it hasn't broken this trend line here. And then you could almost make a minor, broke this one here, but then it's kind of gone sideways. You could draw another one right in here. And, that's what I would be looking for, is the next thing to break if it's going to break down. Otherwise, we just got to keep monitoring it to see if, where it's, if it wants to push higher or not. Take a look at the financials. XLF. There we go. And this looked like it wanted to break out on Wednesday, Thursday, and then we get this doji bar, and you pull back a little bit on Friday. But look at the picture. So it acts like it's trying. It's definitely not. It's not rolling over yet. And so if I extend this to the right, this trend line from last October seems to be holding. But if it were to break down, come back down in here, then that would be a big negative. But right now, it just hasn't done that yet. And so that's a positive for the market, that I think the financials are still hanging up there. And the home builders, sideways. Semiconductors may be starting to roll over. Let's take a look at the biotech on the NASDAQ. And this is still chopping sideways. We had a one-day little pop-up here on Thursday, but really, here's June 5th. We're down for the week, slightly, very slightly. Let's see, from 367 down to basically call it 364. And let's see, the next and last one is XLE, the energy, and I know I've got that in here. Here we go. So the energy continues its downtrend. It pops up, got one day above the 10-day, and then it just reversed right back down. So, the 10's below the 21. 21's now below the 55. So now the short term and intermediate term is trending to the downside, and the long term, the 55, is below the 233. So all moving averages are negative on XLE. I would not be surprised to see this continue down. There's no reason not to believe that the trend's going to continue and come back down and at least retest, maybe these lows. So that's the best take and best reading on that. Let's take a look at our stocks now. Let's take a look at Best Buy as the first one. And Best Buy is a trade idea that I've got open right now, and I'm into puts. And if you are following me, access to the Trade Ideas webpage, first name and email, and you're good to go. And then you're a subscriber to Beyond the Chart. It's free right now. And what I've done on the trade ideas is I'm putting out short 2 to 3 minute videos on the trade ideas page that talks about what my thinking was with putting on that trade and what I'm walking through and thinking, trying to do a little more education to help folks that are following trade ideas for a good understanding of what I'm thinking about when I come up with the trade idea. So I'm doing that and putting those short videos on the trade idea page. But right now you can see the trend looks down. It's broken this pretty big long-term moving average from January 2014. It broke down through there pretty substantially in May. And I'm sticking with the fact that I think the trend, the short and intermediate, is still to the downside. Now the long term has not turned down, but the 55 is coming down, and I wouldn't be surprised to see that, and I wouldn't be surprised to see this little trend line here broken to the downside. If it does, because it's fairly horizontal, we could get a fairly sharp break, so we'll see. That's it on Best Buy. Costco is one I haven't looked at in a long time. Yeah, where are you? There we go. There in the middle. Now Costco is rolling over also, and again, short-term and intermediate term are trending down. You can just see the pretty solid trend to the downside here, and again, no reason to think that it's not going to continue. It looks like 5 waves have completed up, and even if you go all the way back, well, here's March 2009. So to me, it almost looks like you got one, and I'll have to go back and look at this in more detail, like maybe on a weekly chart when I look at this far of long term. But this looks like 1, 2, strong 3, 4, and like we've got a 5th wave. And if that's the case, and especially if you were to take a trend line here, I like to use my crosshairs to kind of nail in. Let's take some of the reaction points in here and just kind of swag it. We're getting close to coming back down to the the long-term trend with those 2 support lines in here. We'll have to see how close I am, and actually needs to be a little bit tighter based on where those points are. Okay, so that's where we're at. So it's getting close to it. And and then it's interesting that that's right where the 233-day moving average is. It's kind of lying right into that trend, that long-term trend. So I would not be surprised to see this come down in here. And it happens to coincide where support came in before, in this area. So around 135 could be an interesting support zone for Costco. So we'll have to watch that and get a little closer on a more daily basis in here watching Costco. Netflix is the next one we'll take a look at. Now Netflix is, boy, what a run this stock has been having, huh? So now I think we're in a 5th wave, though. I think we're in a 5th intermediate or primary wave up. And from this low right here in August 2012, I'm looking at 1, 2, super strong 3, and then a 4th pullback. And then I think we're in a 5th primary wave up. And I think we've had 1, 2, and that we're working a 3rd intermediate wave. And based on this price action, having a 3rd intermediate wave, it's acting like a 3rd wave. Okay, just because of the gaps and the straight line type movement it's getting. But based on the projections, the Fibonacci projections, I think there's a good chance that this 3rd minor wave right up in here is topped out and that we're stalling out. And you look at the gaps here, the real sign you're going to see is if this gap closes, there's a good chance that these are breakaway, runaway type, turning into runaway type gaps, and that this could be an exhaustion gap. If this is filled within 5 days, okay, we've had 3 days. So if this gets filled in the next 2 days, then I would call this an exhaustion gap and look for, not that it's necessarily ending, but that we get a 4th wave correction back that should not go below this high here of 576. So it'll, and probably might be a zigzag, pullback. So that's what I'd be watching for as the next development on Netflix. We'll see if that happens. And then, of course, 4th wave is going to be followed by a 5th minor wave up, and then that'll be the end of intermediate wave 3. and then we'll get more of a pullback. So that's the scenario I'm working. We'll see if that plays out. Starbucks. Let's take a look at Starbucks. These are some of my favorite retailers too. I love to go to all of these places. So Starbucks, there you go. And yes, I do subscribe to Netflix. And so let's see, Starbucks, here we go. I think we're in a third, well, we got third primary, fourth, we're working a fifth minor wave, not primary, minor wave up. But it is within, and I actually, what I did was I just went from this low point because I hadn't really analyzed it from a longer term basis. So this looked like a major pullback, a low, key low point. So from this low point, I'm counting 1, 2, a third, fourth, and a fifth minor wave up. And we are starting to get divergence in here. Okay, so that's the other thing to watch for. The indicators are starting to show some divergence, and on all three indicators. So we could be getting ready to top out in here. So that's what I'd watch for. And then that would mean a more substantial correction would be in the works after that for Starbucks. And then the last one we'll take a look at is Whole Foods. And Whole Foods has really been having a tough time lately. As you can see, we're at topped out up here January 18th, and ever since that, it's done. And what was the close on January 18th? 57, and we closed Friday at 40. So pretty good little whack on here coming down, and a big gap here. We closed this gap here. So we're now back to where we had this big consolidation, and it broke out of. And there's a good chance we could be getting support right in here at the top of that zone. Let me look at this. I don't think I have any stronger of a wave count on that. I haven't actually created a good Elliott wave picture on that. I've got that as a to-do. I need to do that. I'll bet we're getting some divergence. We look in here. Didn't quite show up as divergence on the RSI. But we are getting it on the DI minus, and when I see this little picture of breaking the ADX, a lot of times that means the strong selling is over, at least for a while. And we got divergence here on the demand index. So 2 out of the 3 are showing some kind of divergence. And when you get that, there's a good chance that you're going to get a turn, or at least a sideways consolidation on the stock for a while. So we'll see. And the fact that it's then coming into the top of the zone that it broke out of once before, I wouldn't be surprised to see some kind of support. But if it were to break down through this, then we got a much more serious situation on our hands. The short-term and intermediate trends are to the downside. As you can see, the trending just continues. And so we'll just have to watch. Right now, it hasn't given us a sign. There's no closing above the 10. We're not turning. The 10 hasn't breaking above the 21. There's no sign that this downward trend is stopping yet, other than the indicators kind of raising a little flag. But you got to go off the price action. The indicators are kind of one of those things that says, okay, I always look at them as flags, all right? But you got to go off the price action. All right, that's it for today. This has been Joe for Beyond the Chart. If you're watching this anywhere else but my website, head on over there. You've got a lot of posts to take a look at and the information, and of course, access to the Trade Ideas and the new videos I'm putting out on the Trade Ideas webpage. And I will be back on Monday night with another market update. We'll take a look at the first day of price action and see where we're at. All right, everyone, have a great weekend. This has been Joe, and we'll talk to you Monday.